Good afternoon, traders. Mark here from the Day Trading Room. The time is 4:15 London time on Thursday, the 9th of December 2010. And I'm going to run through today's trades so far. And I'm going to run through yesterday's trades and some of the reasoning behind them. Let's just get that out of the way. Okay, we've got a 3-minute chart in front of us, and the reason I've done that, actually, before I continue, let's just say that they've rolled over now. Futures have rolled over, so the price is adjusted on the trade station charts for me. The previous price was December, so some of the levels may be different. Some of the actual prices may be different, but the levels are the same, just been adjusted for the current front month. So get that out of the way. Let's get cracking. Right. Very key level on Friday was this 11,320. And then on the next Monday we couldn't break it. We broke it by a few ticks, and that became the high of the day, 11,322. And the Tuesday we pushed down to it, a little bit of congestion around it, pushed back up to it. So it's a really key level. That is one I've marked on my chart, and it's one that I'm looking for some action around it during the actual day on Wednesday. So that's exactly what happened on Wednesday. The market pushed up, and it pushed up to that last 11,320 level. And now, not only that, let's get the pen out. Not only that, it was actually a good opening drive. There was the open. It was a good 30 points plus opening drive to coincide with the 2:45 level London time, which is the first 15 minutes. And we know that time is very important. That the actual time of the day is very important when we're trading the Dow or the S&P, because of the nature of the way that the bigger companies move the money around. These sort of times, we know we get the midday times very important. The first 15 minutes, the first half an hour, first hour, all these sort of things sometimes can coincide with a change in trend, either when fresh buyers or fresh sellers are entering, or when the actual buyers or sellers are backing off. So you may get, for example, this is a poor example, hedge fund looking to sell. I'm looking to sell a large number of contracts or stocks over a period, over the day, and so they may wait for the first 15 minutes to get the liquidity into the stocks, especially the smaller stocks, and then they may start selling, which is why you perhaps get a change in trend in the first 15 minutes. Or it may be a continuation of the trend, but it's worth noting some of the key levels, and you get to know some of the important times of day. Anyway, so there's three things going for this short: the fact that we moved a good 30 points in 15 minutes, the fact that it was the 15 minutes period, and the fact that we pushed right up to that really good resistance level, key level at the 11,320. So I took a short. I took two shorts actually. I shorted as we pushed up to it and started to fail. The tape looked like that was the key level. Sorry, the turning point. It didn't quite turn. Don't know why I did that really. Should have waited another 2 minutes. Would have got a better price overall. But then I added as we pushed up to this 11,320 and put that tail in. Stop was going to be above it. Didn't want to get caught in any of an opening drive. I'm looking to come out at around the 50% of the move. That's my sort of key thing, around the VWAP 50% level. I'm looking to come out just in case we then further push on. It reduces the risk. We got that nicely. It pushed back, pushed down to the little moving average and the VWAP, and then I took it out, scaled out all of it really in between that moving average and that VWAP. So that was a nice trade. You can actually hold a position looking for a push down to the lower of the range, but for me this little congestion point here is always an unknown. You don't know what's happening to it, you don't know whether it's then going to push on, bearing in mind the bulls are in control on the sort of monthly, daily and the daily chart, so that's always in the back of your head. You are fighting against the medium term trend by going short, but obviously pick your entries well, you can get on it. And actually really what happened was, as we pushed back up, this was a pure tape play, half size for me. We pushed back up and just started to fail, and there was a big seller just hitting it there. And the key thing really was the fact that these ticks weren't even below zero. They weren't even above zero. We'd had a reasonably low reading, lower than the higher reading. We had like a minus 800 here, and we only got to sort of plus 500 here. So that to me is indicating that there's a bit more weakness in the market. We pushed back up, couldn't get above zero. Bit of a tape read as well, half size, had to have half size because the stop was going to be right above there. So I say right above there, there's only sort of 12 or 13 ticks, 13 points, so not too bad. Then we got the rollover, came down, just looking for that gap fill. Well, we'd already filled the gap, but looking for yesterday's close, should I say. Didn't quite get it. Started to push back up, and there was my exit there. Okay trade, not very much size, but then the risk was pretty wide, so I had to leave it at that. Um, Probably not one I would have taken if I'm looking back on it. But it was just those ticks and the tape read just combined. I thought it was worth a go with a smaller position. Anyway, unfortunately, coming out of there meant I missed this push through the low. But as you know, if you've been watching some of the other videos, it's one of my favourite little setups. People are caught out looking for that first pullback. So there was the low of the day. There was the gap. We really picked up a bit of steam. We flushed through, got a nice low tick reading. Still plenty of downside, really, potentially. And what's my first at my entries? I'm looking for a pullback. There you go, ticks to zero. Back to the break point, which was this low here, and there we had it. We just poked through by a few ticks, start to roll over. So that's the short. For me, it's a nice low risk reward. If the ticks then started to push up and we'd held on too much longer, get my words out, too much longer, they would have closed. But 3 or 4 minutes is fine. Although the longer it stays there, the less likely it's gonna break to new lows and give you extended targets. Which is why I came out here. We double bottomed, tagged it, started to push up, take buy there. Ticks weren't really confirming, so I took it all out there. Little scalp trade meant I missed the bigger move, but that's one of those things. And actually, that's something I've got down in my review notes. The fact that this is happening quite a lot now. You're getting the double bottom, and it's actually breaking on the third test. So I might revise my setup very, very slightly to perhaps scale out, or to perhaps look to go again if it pushes up to a resistance level for a push lower. But the foundations of the setup are good, still working, still one of my favourite plays. It surprises people. You've got a key level here. Excuse my drawing, but I'll just be quick with this. You've got a key level here. The market's pushes through it, pulls back. It may not pull back to that level if it does even better. But what you're doing is you're getting that surprise. You're getting a good spike in volume. You're getting the ticks flushing lower and then pulling back to zero. This is a mess, isn't it? You're getting the ticks pulling back to zero, but you get the point. We're basically surprising people, getting a little consolidation, perhaps a little pop up, just sends the ticks to zero, then look for a further downside. And that's a good solid setup. So that was good. Let's move on to the next one. Another good solid setup for me. This is that midday window, but it's actually 4:45 and 5:15 London time. Right there, which is the midday New York time. So I always look for perhaps a change in sentiment, perhaps a change in trend, a little bit of a rollover, just something that changes the mood of the market around that time. It worked yesterday. It worked on a Tuesday, and so I thought I'd take it on Wednesday. And also the fact that 50% retracement, we're in a sort of rangy market, quite choppy, dirty candles I like to call them. Back to around the 50% of the move, coincided with that midday range. Just took on this candle here, started to push back up, failed, took the short here, had to sit through. It was hardly anything, it was about 5 ticks worth of heat. Then it rolled over, and because it took so long, I just decided to go with fixed targets, 10 ticks and 20 ticks. And this was just purely because of the 20 tick target on that one. The fact that it happened to curl back up was just pure luck. I was waiting for the 20 ticks, or I was waiting for a fresh low in the tick index. I got the 20 ticks first, so it was a nice trade, half off there and then the half off there, and that was it. Done for the day on that one. Let's go to this morning's trades. That key level again, really severe opening drive. We opened right at the highs here, and it's rolled over today, so there's a lot of confusion around, people not sure what's going on, so you got to take it steady. You got to be a little bit cautious. Don't get confused yourself. Make sure your charts are adjusting, make sure you're on the correct month, make sure your dome's on the correct month, and all that sort of stuff. So really significant opening drive actually, but we pushed down to that nice 11,320 level that I've been talking about. But when you're pushing lower and you've got that momentum behind you, don't just step in front of it. Don't just stand there with your order. let it push through, let it consolidate, just let it show some evidence that there is going to be some buyers, or the sellers are going to shut off and the buyers are perhaps going to hold it. Um, you need to just be careful not to stand right in front of that train, especially on an opening drive. But it's okay. We had a reasonable push. We'd push lower. I saw the evidence of the buyers there. This tail that then got pushed straight back up. That was my entry. Decided to give that a crack there, a buy there, looking for a push back up to the midpoint here. We didn't get it. We consolidated around. We pushed through that low, and my stop was literally a few ticks away from that. Um, I wanted to come out quite early because I was going to have another go under the gap for a push back up if it decided to stretch through. So I got away with that one. It pushed back up, and because I got away with it, I just took it out as we'd started to congest above that on that resistance level there. So that was okay. A little bit of luck on that one. Okay read, but if my entry had been a little bit better, I could have got it straight away at that. But that didn't give me the push I needed. Because my entry was a little bit late, didn't quite get that 10 tick. Next trade, this was one I was waiting for. I was waiting for us to push higher and then roll back over, looking for that gap fill. But the Dow was a lot weaker, and so what I did is I went over to the S&P, only because there was more mileage in this. You can see here the S&P was slightly stronger, but it also meant there was more room to go for us to get to that range fill. Hadn't quite filled the range yet, and so I drew a line on the sand at this 28 level, just because there was a tape stellar there, and I was looking for a push up that rolled over, and then I was looking for a short as we broke under it. The data came out, gave us a little bit of a spike, which was even better because it gave us the spike, then we started to roll over. And if I go back over to the Dow again quickly, we can see that it really didn't affect it at all. It pushed straight back under, and the Dow was showing, really the ticks were showing also, giving us that little heads up that we were going to push lower. And as I say, I went on to the S&P purely because there was a little bit more mileage in the trade. Took the short as we broke under that 12.28 level. Filled it at 12.27 and 3/4. Took 2/3 off just as we started to poke under that low at 12.26 and 1/4. Held a third, looking for that range fill. We started to come down here. I had an order in at just there. 11 contracts traded at it. Didn't fill me. That's the way it seems to go with the S&P. It popped up, and I just ended up hitting that offer and getting out at 12.25 and 1/4. So nice little trade. That's good. Got a good chunk of that move, and it probably worked out better going on the S&P than the Dow, purely because of the situation. The S&P had a little bit of catching up to do based on the Dow, so there's a little bit more meat in that trade. So those are the trades. We'll be looking to see what happens this afternoon. Big line in the sand. Let's get back to the Dow very quickly. Big line in the sand with that 11,320 level. That's really worth looking, but you can see how weak this is compared to the S&P. But if you haven't got any chart, get that 11,320 level in. That's on the front month, and we'll see what happens. See if I get a push up midday. Coming up to it now, it's 4:30, so next half an hour we'll see if we get a cycle up, potentially back to the VWAP maybe, I don't know, we'll see. Play it by ear. Good trading guys, manage your risk, and we'll be back with another video shortly.